Hey everyone, it's Thursday evening, August 31st, and we've been inundated with phone calls and emails about some changes FHA just made to the reverse mortgage program just on Tuesday evening actually. So I figured it'd be easier here to record a video. So basically to summarize, FHA Tuesday evening totally surprised the industry. We had no clue they were going to make any kind of changes to the reverse mortgage. But they surprised us with essentially three changes. And the three changes, one is good, one is kind of neutral, and the other one, unfortunately, is not good. It's bad. So let's start with the good change. So first off, the ongoing mortgage insurance premium for reverse mortgages, sometimes known as the annual MIP, the ongoing MIP was reduced from 1.25% of the loan balance down to 0.5% of the loan balance, which obviously is a good thing. Now, that will not be retroactive to anyone who currently has a reverse mortgage. This will only be for people who go into the reverse mortgage, new borrowers. That's the good change that was made. The neutral change, kind of the some good, some bad, but kind of middle of the road, the upfront mortgage insurance premium, which all FHA insured reverse mortgages have, the upfront MIP, which currently is either 0.5% of the appraised value or 2.5% of the appraised value, that was changed to now be across the board 2% of the appraised value. So regardless of how much is owed, how much is being borrowed, it's going to be 2% of the appraised value. So again, for some borrowers, that's a good thing. It was reduced from 2.5 down to 2. For other borrowers, it was increased from 0.5% to 2%. So that's kind of the middle of the road. And then, unfortunately, the biggest kicker, which was the biggest negative we had with the changes that were made, FHA made an adjustment to what's called the principal limit factors. And essentially what that means is the loan to value. They made a pretty drastic adjustment to the loan to value. So basically, the amount the borrower qualifies for is tied to the age of the youngest person and the current interest rate. FHA made a drastic cut to that LTV. Ballpark idea, it's going to be somewhere in between the 10 and 20% reduction, which for those of my clients who have been sitting on the fence and possibly considering this loan for a while, that could be the difference between qualifying for this loan and not qualifying for this loan. So basically, like I said, one good change, one middle of the road change, and one bad change. All three of these changes are taking effect on October 2nd, 2017. In normal FHA fashion, when they announce a change like this, they allow for a time period. And with this change, it's for case numbers that have been assigned October 2nd or after. So the good news is for borrowers who are still considering this and for borrowers who want to move forward, you have until October 2nd to have a case number assigned. And in order to get that case number, there are two things that have to happen. Number one, the counseling session has to be completed. And number two, you have to complete an application. Those two things get you to the case number assignment. But obviously questions, call me, email me, let me know. But again, the changes, wanted to get that out there on the street because there have been lots of phone calls I've been receiving from borrowers who are getting misinformation. Wanted to make sure you guys had accurate information. Again, it is what it is. You know, I'm an old Marine here, so basically the motto in the Marine Corps was, you say jump, I say how high. FHA's made the adjustments. We're just happy to continue to be able to offer the program. So again, please call me, email with any questions. Look forward to hearing from you. Have a great night.